If you're wondering how to ensure your retirement savings last, manage properties from abroad, or optimise your pensions, you're not alone. Let's explore how we've guided many people like you. I'm Bubb-Sacklyn, a chartered financial planner and private wealth manager here at Melbourne Capital Group. I regularly work with people to help them financially plan for their retirement, which could be here in Asia or could be back at home, wherever that might be. Like many clients I've helped, Geoff and Carol are nearing the end of their respective careers and want to retire but aren't sure how to go about it. They also share some typical concerns. Do we have enough to retire? This is a very common question. It's also a vital one to get right. You do not want to run out of funds. What are our domestic tax liabilities? As expats, managing and mitigating domestic tax obligations is an important consideration. In this scenario, Carol is non-domiciled in the UK, which poses further complications and opportunities. Do we have adequate life and health insurance? Once the couple retire, having the right plans in place will be crucial in ensuring they're able to access quality healthcare and that their wealth is protected should the worst happen to either of them. What should we do about our UK properties? Property can be a good investment, but managing a portfolio can be burdensome, especially when you get older. When it comes to retirement, it's important to explore how these assets might best support you. What about our long-abandoned pensions? Like many people who've chosen to work abroad, Carol and Geoff have pre-existing pensions in the UK and aren't sure how to consolidate them or to draw them down. How do we protect our assets from UK inheritance tax in the event of death? Carol is non-UK domiciled and therefore only a certain amount can be passed across to her upon Geoff's death. Ultimately, the couple's financial goal is to retire in Malaysia in the next 3 years. Here's how we would help Carol and Geoff achieve their financial goals. Firstly, we would meet with Carol and Geoff at a time and place that suited them. During this meeting, we would seek to understand their lifestyle, retirement aspirations and values, as well as get to grips with all of those concerns. We would also conduct a deep dive into the couple's financials, looking closely at their assets and liabilities. Our next step would be to use all of the information we've gathered to develop a financial forecast for Carol and Geoff's retirement. The forecast would take into consideration income and likely expenditure up until their 100th birthdays. As part of the forecast, we would also identify potential shortfalls. This forecast would seek to provide an answer to that important question: how much do I need? That sum is different for everyone, but 3 million is commonly recommended if you want to retire comfortably. With a forecast in place, our next step would be to develop a personalised financial strategy. In this instance, we would begin by consolidating the couple's UK pensions into a self-invested personal pensions, or a SIP, simplifying the road to retirement and making investment management more straightforward. Next, we would establish a flexible, low-cost investment platform to manage their cash savings. Regarding their property portfolio, we may suggest liquidating some of their properties to lighten the burden of management. We would further advise on doing this over several years to reduce UK capital gains tax liabilities on the sale of properties. We would also advise reviewing the market value of their properties and raising rents on the properties if appropriate. With the property proceeds, we would recommend establishing an excluded property trust with Carol as the settler and both Carol and Geoff as trustees. The beneficiaries can be each of them and their nephews. We would then review their health and life insurance. Likely in this instance, we would suggest an international inpatient-only medical insurance policy to assist with keeping costs down, rather than an all bells and whistles strategy that can become costly with age. We would review their life insurance policies to determine if still relevant, taking into account potential inheritance taxes in the UK. As to income once they retire, we'd recommend drawing down on the flexible platform first for immediate funds, followed by drawing from the excluded property trust and the SIPs. The latter of the two income sources may be subject to certain tax rules and could take longer to access initially. We view ourselves as a long-term partner and as such would regularly touch base with Carol and Geoff, helping to make sure they are on track and adapting our strategies accordingly. We would have helped Carol and Geoff achieve their financial goal by providing them with a personalised roadmap to retirement that would see them optimise their income and minimise their tax liabilities. If you want to learn more about financial planning for your retirement, give us a call or drop us an email. I'm Bubb-Sacklyn, a chartered financial planner and private wealth manager here at Melbourne Capital Group.